So I'll give this just a few more seconds, let everybody in, and then we can get started. All right, so welcome to the webinar. Welcome to the second of the 4-day live event, subtitled How to Capitalize on Monster Moves in the Markets and Also Avoid the Market Traps. My name is Mark Shawson, the pattern trader. If you weren't on yesterday, I spoke briefly about my price action, price pattern trading methodology that I seek to capitalize on huge moves in the markets only using price action. So I'm very often asked the question, do I trade the news? And I guess the very simple one-word answer is no. To me, the markets are ahead of the news. The markets, price is the news. Whatever's going on with price is telling us ahead of time what to anticipate. And if you understand how to look at these trends, how to look at these patterns, and I'll show you over and over again how I was able to do it simply looking just at price action and price patterns. So, I'll go through some real-time examples. I'll look at exactly what happened today, and then we can, discuss it and you can ask questions. So I always like to share what I'm up to, what I'm doing. I came in short Moderna. I think I spoke about it yesterday. In fact, every day I send out an email to our elite members, our elite program. If you're interested in our elite program, this is a daily email service where every day I send out an email just like this. So you can see this was yesterday's email, Monday, April 4th, to our elite subscribers. And basically, I was looking at the stock of Moderna. We actually spoke about it, I think, briefly yesterday in the presentation. And I said, based on certain key reversals, double top price action, the main trend, that I was looking to get short, that I was looking to take advantage of a downtrend in Moderna. So basically, I advised our members to put a sell stop at $171. It closed about 172.5. That sell stop was triggered, and today Moderna is trading in the markets at about, where is Moderna? Right there. It closed at 162. So you would have made $9 if you had shorted this stock pursuant to my discussion. Maybe I should ask for a show of hands. Did anybody on this webinar short Moderna based on my email or our discussion? So Ian says, yes, I did. So hang on, it's coming in so fast. So Ben says me, Greg says yes, Jason says yes from the webinar. Sang says, yes, I did. Ramesh says, yes, thank you. Christian says yes. So again, people always ask, well, is this live? And then, a lot of people accuse me of being scammers when I'm talking about things in real time and then people are actually taking the trades and making money. So John says yes, but only on a demo, but that's okay. So that's no worries. At least, this is the whole thing is an orientation. And, it's not really about making or losing money. I'm trying to introduce you to a way of thinking about the markets. And then you can adapt this, to Forex, to gold, to oil, to whatever you want to trade. So in my email yesterday, I said Moderna is in a long-term downtrend. The recent double top price, bear price pattern indicates a ceiling for this stock. And the key reversal price action could be a catalyst for lower prices. I also disclosed that I was personally short the stock. And so we'll take a look at Moderna in just a moment. And then today I also bought put options on the Dow Jones, the DIA. So when the Dow Jones was trading about, 34,700, I bought the 34,500 puts that expire on Friday. So I actually paid about $1, a little over $1, about $1.03, and they close at about $1.56. So I'm up about 50% on my money. So that's the good and the bad news about options. You can make a lot of money and you can lose a lot of money very, very quickly. Then I also bought these put options on Beyond Meat, the $45 put options, and they were up 247% today. So, and I did a whole bunch of other things in, some other accounts. I bought some call options on UVXY. So, heavy bets on the market going down. Also want to share an email that I sent out for this, discussion purposes. I'll, talk about what happened today, but, on Sunday, I sent out this email. So only 2 days ago, this was sent 2 days ago. And I said, the bear is back. And what I said was that the NASDAQ rose about 15% over the last couple of weeks. And I went on to say, while, this was a breathtaking rally, I believe that this was a short covering rally, meaning that it was likely going to end and turn lower. And today we saw that the beginning of that decimation. And I said, therefore it stands to reason that all the dog stocks like Roku, Beyond Meat, Upstart, and Etsy that have rallied over the past few weeks will stall out at current levels and begin to descend lower. And that's, what we saw in all of these stocks today. So, I put this out on Sunday. I have no, special inside information, but, we saw Upstart crater $10 today. This is UPST. I talked about this yesterday, that this is a very bearish stock. I expect this stock to make new lows, and today you can see we crashed. So we were talking about this yesterday at 114, and today closed at 103, down $11. We talked about Etsy, and today we crashed lower, and Beyond Meat, which I bought the puts last week, also crashed about $4, and all looks like they're going to go lower. So basically, it doesn't matter what the company is. It doesn't matter what the instrument is. I just look at a series of patterns and trends to make a determination about risk-reward relationships. And it's all about risk and reward. And so I think we briefly talked about Etsy yesterday. If we didn't, I know we did, because I spoke about this pattern and the trend. So it doesn't matter what the chart is. So I open up a price chart, and it needs to speak to me. It needs to say, hey, this is going to go up, this is going to go down, and there's a good opportunity where I can take a small amount of risk for an acceptable return. And to me, Etsy presents just that opportunity. So when I look at Etsy, the first thing I say to myself, is this an uptrend or a downtrend? And I think if I had a 6-year-old sitting right next to me and I said, is this going up or going down? We can all see this has gone from $300 to $130. And so this is in a profound downtrend. So I'm always looking to surrender to the will of the market, get in sync with where the market's looking to go for the next 3 days, the next 3 weeks. There may be little trends, there may be bigger trends. This is a big trend. This is a trend that's going lower. And then within the trend, it all started off with this pattern. You had a double top, which is exactly what it sounds like. It makes 2 peaks where it goes to a high, it backs off, it retests that high. And when it comes through this neckline, which is simply a line drawn through the pattern, this was the firing gun. So once we see these patterns, this was a reversal pattern, which suggested that the movement going into this pattern was higher. And this being a reversal pattern, it suggested that it was going to reverse. And that's exactly what it did. And there's no sign of this thing, turning back from this downtrend and this pattern. So in addition to the double top, we also had this head and shoulders, which looks just like a man or woman's left shoulder. The peak is the head, and that's the right shoulder. And when it comes through the neckline, it also confirms. So there was a kind of a funky downtrending neckline. And when this, head and shoulder was pierced here, this signified another confirmation. So you had one confirmation there, you had another confirmation there, and both would have gotten you on a nice ride to much lower prices. So the question is, with this in our rear view mirror, where does Etsy go from here, or how do we trade it? So once we understand the pattern and the trend is lower, I'm always looking for ways to get in sync with the cadence. And so now we have another pattern in Etsy in the form of this symmetrical triangle. You can see perfect when you join the highs and you join the lows, you get the symmetrical triangle. If you got an architect's tool, I don't think you could, draw this more perfectly. So you can see that this is a series of lower highs. Every bounce, is met with just a weaker bounce thereafter. And so this is just, finding another sawtooth way to descend lower. And so now we have this pattern, and then we have today's price action, which was what I call an inside day bar. So you can see that today's high and low sits within the range of yesterday. So does everybody understand that's called an inside bar? Because literally the range of today from high to low sits within the range, the high and low of yesterday. Now I look at these bars, these inside bars, as coiling, as a building of energy, right? And now I am, trying to surmise which way is the energy going to release. So we're building and storing more and more. And you can see as it gets into the business end of this little triangle, it's storing and coiling and building energies. And to my mind, the energy is going to release in the direction of the trend. Let me just put this back. Well, I don't know where it went to, but let me just put this back. So we have this descending triangle, and now we have this inside bar, which is building energy. And to my mind, the energy is going to release in the direction as indicated by the prior pattern and trend. So, the markets, I just look to get in sync with the markets. And I call this inside bar an insurance day bar, right? So it's just my little phraseology. There's, two definitions of what I call an insurance day bar. One is what we call a key reversal, where we look at and see how the market closes relative to the high and low. And the other is an inside bar. Now, I don't really care where an inside bar is. It could even close on the high. All I see this inside bar as storing of energy that's going to release in the direction of the trend or the pattern. And so once I kind of surmise the pattern, the trend, then I wait for a series of bars, either a key reversal or an inside day bar. And then once I kind of see that, then I set up my trade execution, which says put a sell stop right underneath the low of that inside bar. And so it requires the market to confirm what I'm looking at. So the next day, if the market opens and goes higher, guess what? My resting order is never triggered, no harm, no foul, and I'm not put into it. On the other hand, if the market opens and goes higher and messes around for 3-4 hours and then hits this thing, then I'm going to be put in at the time and price that this thing is ready to go in my direction. And so this is exactly how I would play Etsy going into tomorrow's session. Now, I realize there could be still some noise in here. It could be, a herky-jerky type of affair. But, in order to catch this breakout, I would simply put a sell stop right there and a stop loss right there. And so this represents my risk. And I'm looking for this thing to make new lows. So if this thing breaks from 130 to 80, to 80 bucks, I could make 50 bucks, risking $5. And so I look at those risk reward offsets. And so if I can make a determination where I can make 3 times my risk, I'm going to risk, let's say $6, and I can see my way to making $18. That's 3 times my risk. And if you could set up your trades where you have an outcome of 3-to-1, you could actually lose 72% of your trades. And so this is what I look for on an ongoing basis. I look for these trends, these patterns, these setups, and then I just put myself in position to get lucky. So we talked about Moderna yesterday. So this is what we talked about yesterday. So it's not like I'm just saying, well, this is what I would have done. This is what I told you I was doing, and I was short, and I did come in short, and this thing did go down $10. So it's not like, I'm saying something after the fact. So this is Moderna. And we talked about this yesterday, where there are all kinds of things on the daily and the weekly where there was all kinds of very bearish price action. So you see this very big double top here, and then this downtrend. And then, more recently, you had this nearer term down, double top, where you got these two peaks in the same area. But what I look at is both the pattern and then the price action. And what stood out to me was this guy right here, where you made a new high for that day, but by the end of the day, the sellers were in control. And it was, a respectably sized bar. It was a respectable range. And so when I see these, they visually start telling me that, if this breaks this low, that it's going to go lower. So it went sideways for, 2 days thereafter. And then yesterday we talked about it, where we had this very small reversal again, where you made a new high and you close on the low. So when I sent out my email last night, I suggested to those on our elite member list to just put a sell stop right underneath yesterday's low, which was $171. $171. And you can see today we closed $9 lower. So if you got short at 171, you would have $9 in the bag. And so this was an area where I felt like there was little to no risk. So, sometimes, we hear about the Fed, we hear about inflation, we hear, I can listen to the TV and find, 10 analysts, 5 will say buy this market, 5 will say short this market. They all sound very intelligent. They all have very intelligent reasons for their thesis. And all it does is just confuse the hell out of you. To me, the market will tell you where it wants to go and when it wants to go. And you just have to respect what the market's telling you. Shut off your brain and, look at what the market's telling you. And when I see these kind of key reversals in the direction of this massive trend, when I see this pattern, it all kind of comes together. And so, even if I'm wrong in these things, I'm just going to take a few dollars, risk. But, if I'm right, I can make a massive amount of money. So really what I'm looking to do is take out the big move. So now we've kind of cut through this neckline. We've kind of just closed. Again, the neckline is simply a line drawn through the pattern. The pattern I'm referring to is this kind of double top. And so now this is kind of confirming that this is a distribution area, that on balance, I think we're going to start, descending like a plane coming into LaGuardia. When you first feel that bump, it doesn't just hit the airport, after that. It takes a while to descend. But I do think that, you could stay short Moderna, and you will likely be rewarded by seeing this thing come back to these lows, or probably new lows. So to my mind, it looks like you would just about sell anything right now. As I said on Sunday, to my mind, the recent rally in the markets has been what I call a short covering rally. So if I look at the triple Qs are an ETF that this is an ETF that encompasses most of the stocks in the NASDAQ. So whatever happens in this ETF is exactly what's happening in the NASDAQ. So they're really one and the same. And so you can see that in the last couple of weeks, we've just had an unrelenting rally. These short covering rallies, they literally don't let you out. If you're short here, they'll never let you out. You'll never see a down print. And that's how you know it's a short covering rally. It's unrelenting, but it goes on for, days and weeks where you think, wow, how can this not be an up market? It's going up every single day. And that's how you kind of emotionally start getting, sucked into it, where it's like going up every day, every minute, every hour, relentlessly. And you're saying, wow, this is just it's got to be an uptrend, until it's not. And so to my mind, what I look for is, a series of patterns that informs me, what the real deal is. And to me, we had a very subtle kind of double, head and shoulders here. And then you had another head and shoulders here. So this whole area here, to my mind, was a distribution pattern where the smart people were selling. It was almost like a rectangle top. And as you can see, we broke out of this top a couple times, and then we re-challenged this thing. And so now the question is, I don't know, I don't like cliches. I mean, this thing looks too much like this thing. And so, whenever we see something like this, it doesn't usually. So anyhow, it's been very, very difficult market, needless to say. It's just been, thrusting, up and down. And this is why I say you really have to understand the vehicle you're trading. This is not a stock market. It's a market of stocks. So some stocks have been going higher and will continue to do so. And some are going lower and will continue to do so. And I look to find each one of those and just find the risk reward. So kind of waxing philosophical about where the markets are going to go and why they're going to do it really has no bearing or use in trading. I mean, I will just say that I've been trading for longer than I care to remember or acknowledge. And there's usually two simple rules for trading. Rule number one is don't fight the Fed. The Federal Reserve, right? So when the Federal Reserve is loosening money, as it did in COVID, the market went straight up. So rule one is don't fight the Fed. And rule two is see rule one. So in a nutshell, not smart to fight the Fed. And right now, the Fed, we've had the wind at our back, and now we have the wind at our face. The Fed has told us they are going on an intense regime to try and stamp out this, inflation that is out of hand, and they are well behind the curve. They could do 30 rate hikes and still not catch up to where inflation is. And so, that's been the hard part. I've known all through this thing. Yes, markets can do all kinds of crazy things. They got beat up, they got oversold, so they rallied. But, basically, you don't want to fight the Fed. And, this is starting to tell me that there is a formidable resistance level at this 370 on the QQQs. And on balance, probably likely to go down. And I say on balance because, things don't go straight up and then straight down. So I imagine there's going to be a lot of volatility and what have you, but the stocks that look weak are probably going to keep going weaker. And so, I think the Rokus of the world, the Twilios of the world are going to keep going lower. So this is a stock called Twilio. So, I look at numerous time frames to, look at, where an instrument is trading. So this is Twilio. And what we see in Twilio is this massive double top. So again, it all starts with a pattern. This giant M top that tells us that this uptrend is now going to get thrown in reverse. And that's exactly what has occurred. since you broke this neckline, which is simply a line drawn through the pattern, once it starts busting that at 280, this told you that by and large now we're going lower. Now things don't go down, in a straight line, and this pretty much has. But we formed kind of this neat little channel. We started to sneak out of it, but I suspect we're going to go right back in it. And the path of least resistance is lower. So all of these stocks kind of look like this. They had their day in the sun where the dogs had some rallies. So this went from 120 to 180, which is a 50% rally. I mean, 50%, that's huge. But you're still down, 80% from the high, or whatever that figure is. So, the statistics, the numbers, the way these markets fly around is, quite, used to be in the old days, fund managers try to make 5% a year. Now these stocks go up and down 12% in a day. But, I do think that, you're at this ceiling here, and today, you started, pointing back down in the direction of the trend. So this may be, again, these things, they've made a floor. Whether they've hit a ceiling is uncertain. So every day it's kind of backing and filling. So maybe not a great, example, but you get the idea. So Seng says, how do you be on your email list? So, I'm not going to, try and sell you anything, Sang. Believe it or not, I'm, never going to try and pitch you on anything. So, everyone's always hesitant that they're going to get a pitch. After the webinar series, you'll get an email from our team. And if you, want to join our email, they'll let you know, or you can just send an inquiry to our email. I'll put that support at the pattern trader. And if you're interested, say, I'd like to join your elite program. Can you please have somebody get in touch with me? But that's about the size of the, solicitation. I'm not going to try and solicit you for anything. This is just an educational presentation, just to give you an idea of how I look at things. Bruce says, is the Fed still buying stock to prop up the markets, or have they stopped? So, Bruce, very respectfully, this is precisely the kind of thinking and question that has really very little relevancy in stocks. Whether they've stopped, whether they've started, doesn't really matter, because, in between, you can have whole periods of time where even if they're started and the market's going to go lower, you could have lost your boots in, this rally. So to me, markets are all about risk and reward. My question is, where do I get in and how much do I risk? The why something's going to go somewhere is irrelevant. To me, the why is just to sound intelligent at a cocktail party. I can cite you chapter and verse, why I think, real rates are, way behind the Fed's, curve and the Phillips curve and employment and all of that. And it has no bearing on trading. What I try and do, those are just macroeconomic things. I don't try and play armchair economist here. I'm just trying to find pockets where I can identify risk and reward. If I get in here, how much do I have to risk? And if I risk that, is it worth it? Because can I see, an outcome that's 2 or 3 times bigger than my risk? That's the only question I ask myself, and you should. So when I, set up this trade, in Moderna yesterday, I kind of felt like I was at an area where there was very little risk. That if I could get in somewhere in here, that, I couldn't really see this high getting taken out. So it means if I shorted here, in my mind, I was going to risk $5-6 and then I was going to be gone. So this is just an area where this is kind of starting to de-risk itself. It's getting in an area where it's told you where the upside is. So by not being able to exceed this, these reversals have told you where the risk is. And since yesterday you were so close to where that risk is, you had such a small pocket of risk. This is what I look for. So the macro questions of Moderna and vaccines and vaccine mandates and government policy, and we could, have a discussion for the next 4 hours, all of which has nothing to do with trading and is completely useless to your bottom line. I simply ask, if I get in here, can I, get in for a small risk for an acceptable return? And I thought that that was a trade that was worth getting in. And that's the question. If I get in here, what is my risk? And is it small enough where I can accept that for a bigger return? And that is the only questions that you should be asking yourself as trading. If you start thinking about Fed policy and trying to second guess Powell and all of that stuff, well, it has just no place in trading. Trading is a discounting mechanism. The markets can take a lot longer. I think Greenspan, somebody said the markets can stay irrational a lot longer than you can stay solvent. So that you can look at something and it looks insane, but it can stay insane for a lot longer, and then you'll burn through all your money and eventually you'll be right. But, that's just no way to trade. So trading is all about finding something where the risk reward is in your favor. Andre says, don't interest rates affect overall valuations? Again, Andre, by asking that question, I don't think you've heard what I've said. I don't care. Interest rates don't affect valuations. Earnings do. I know that that'll sound ludicrous to you, but that's really the truth. These are growth stocks based on no earnings. Most of these stocks don't have earnings. They're all have losing. They all lose money. Like Zoom. I don't think Zoom earns money. I'm not sure. They earn revenues, but when you sub out all the costs, I'm not sure that this actually earns money. So these stocks that, these growth stocks that, have no earnings are going to get pounded in an environment where rates are going higher. Christian says, do you think the dollar yen will continue uptrend? So we also talked briefly about dollar yen. I said I would put a buy stop above yesterday's high. There was an inside bar. So, what we were looking at in dollar yen, both on the weekly and the daily, is this is in a protracted uptrend. You have this kind of ascending broadening pattern, which, can be bearish or it could be a continuation. Caught a thing here, we could go higher. So yesterday, again, just like we saw on Etsy, we have this little inside day bar yesterday with a range. Yesterday was literally inside the range of the previous day. And so again, I look at this as a coil, and then I surmise that the coil is going to uncork in the direction of the trend. So, you could have just simply put a buy stop above yesterday's high, let the market put you in, and now you're in profits. So this gets a little bit tricky whenever you kind of get up until old highs. You could, get a bumpy ride. But for right now, the path of least resistance in the dollar yen is higher. And that was just one way to kind of get back. So you're just trying to get in sync with the major trend or pattern. And in this case, the trend is higher until there's a pattern that suggests that it's come to an end. Eduardo says, I've been in pound Swiss since January 24 using your methodology. I want to say thank you for these webinars. You are welcome, Eduardo. Jean-Pierre says, when you put in a buy stop order above the previous day's high, do you trade the regular trading hours or do you include the extended pre-market? I'm really talking about, for the trades that I suggest, it's in the regular session. In the pre-market, I will actually look to, get a leg up on that and, use the pre-market to, get in something. So, for instance, if there's a key reversal and then in the pre-market, it's, trading higher, I will just short that, saying that, I'll, my risk is smaller than if I get short here. And so, but sometimes I'll do both where I'll short it up there and, if it makes a new low. So I'll do both depending on how aggressive I want to get and, what I'm looking at. But for the most part, the signals I'm talking about, include the regular market, and FX is a 24-hour market. So the signal is, going to get hit whenever it's going to get hit. Oliver says, I'm okay with picking, but the exits I struggle. How do you decide to exit? So Oliver, this discussion of, stop losses and take profits is always a difficult discussion, only because, it depends where something is in its phase. If you kind of caught dollar yen here, your potential, here is a lot different than if you got in here. So it all depends on where you get in the trade. So it always starts with, I step back and I say, okay, what is my outlook? What is my vision for this trade? When I look at Etsy, I see this going to new lows. Now this could take a while. This could bang, for a while. Whenever you get into these things, you could get into, long-term kind of, just trading ranges. But at certain points, I will have a certain objective. I will have a certain vision. I will have a certain expectation. Now, again, this is a little bit different because, difficult because it is so jammed up. Even if we do make it lower, we've got, price, whenever it kind of gets to certain price history, prices tend to support in that area. So between 120 and 130, it's going to be quite whippy. And then under 130, then you've got this guy standing there. So certain things are, where, you have a cadence that once it breaks. So when you kind of had this double top here and it broke, there was no previous price history. So it was just free to kind of just boom, break in the direction because there was nothing conflicting with it. It just, started to break out into the free. Here, you still got history here, you got history there. And so it's, on balance, going to chuck and jive. But my expectation is, if you're a long-term player, get short here. I don't think there's any risk in being long Etsy. I don't see there's, if I try and look at, risk, I've got to see it. If this is a downtrend, it has to end with a recognizable pattern. So I have to see something, that says, okay, this is where I'm getting out and this is where it's likely to turn on me. And I don't see any pattern. So I think that on balance, this is going to go lower. So where's your take profit? I don't know. 110, 190, 80. I still see this thing getting chopped a lot lower. And so, here's, Etsy here, and you can see it's all kind of balled up on the weekly too. It's got to get through all of these areas, but this is just a very ugly looking chart where you have this kind of asymmetric double top that, to me, I look at that as an M top, even though, this top is much lower than that. I can show you Beyond Meat where I saw the same thing at about $170 where you had an asymmetric double top. But to me, when I look back, that still represents an M top. And then you kind of have this funky kind of head and shoulders. So this whole thing looks like just, a pattern that's going to go lower. So this hasn't even started. To my mind, once it hits 100, it's going to just start there and, descend from there. So it all depends what you see in a trade. So, and where you get in and where there's some trouble. So every trade has its own kind of parameters. And, what I look for more or less is an effortless trade where I get in and it just can freely float in the direction that I'm looking for. I kind of saw Moderna as that, where once it cleans through a certain area, so, this is Moderna and, look, so you got this kind of like rounding top up here, but this whole thing is just a very big distribution. And basically you broke out, you rallied to the breakout, and now you're probably likely going to start descending lower and probably much lower. Once you get through this, just looks like there's just a lot lower to go. So all of these stocks look really, really sick. And I said when Beyond Meat was $200, it'd be a $30 stock, and it happened. So it sounds crazy at the time when you're in the midst of everything, and this thing is discovering, a new way for us to, live our society. It goes to $500. You can't, envisage this being a $60 stock, but it happens. And, Zoom was the same thing. It went to 600. I said, this is going to be an $80 stock. Peloton went to 170. I said, it's going to be a $30 stock. And this was all last February, and all of these things occur. And, you can just go and look at all my videos and my emails, and members who've been on these webinars have heard me say this. And again, I have no particular insight other than observing what the market's telling me. So this was Peloton, and it's just a function of pattern. Pattern equals trajectory. When you see a certain pattern, if it's bullish, the market's going to go higher. If it's bearish, the market's going to go lower. So we had this very prominent head and shoulders, rounding top. This is a distribution. Distribution means that the smart people are getting out. In fact, the CEO of Peloton, Foley, sold at $110. So while he was suckering everybody else to buy it, he was selling out. He unloaded hundreds of millions of dollars of this stock right there, while news was coming out that they had a new clothing line here, and it all looked like and so this is what I don't look at the reasons why. Why is superfluous. It has no bearing in trading. This is what all you need to understand is pattern equals trajectory. Once those patterns were formed, and again, the more mature a pattern becomes, the more work it does, the more it actually de-risks it. So when it gets into certain areas, there's actually no risk left. And so, the key is just to wait for those times, wait until, you've done all this work and it kind of gets here. And then once it breaks, this is where you can make a lot of money. And that's what it's all about, is the discipline and waiting for your opportunity and recognizing it when it's seeing it. So, Peloton, I was saying, up here, that this thing was going to be a $20 stock. And you can, kind of measure these things. If you take the neckline from 100 all the way to 170 and shave $70 off the neckline, you come right back to where we are now. So right there, I said it was going to be a $30 stock. Same thing with Beyond Meat, same thing with Zoom, same thing with QuantumScape. So these patterns have implications. So when you see Moderna and you go, wait a minute, this thing's solving all kinds of health things, and you go through all of these thought processes, you can't envisage that Moderna is going to be a $40 stock again, but it probably will be. So Bruce says, what do you mean by distribution? So you either have accumulation, where people are buying, or you have distribution, where people are selling, the smart money. They're getting out while they're suckering you to buy their stock. And they're getting out here. And then, you wonder, how you're left holding the bag. So distribution means that this has just been an ongoing distribution. Every rise, and this is what, again, short covering rallies can be profound. You had this massive short covering rally from $80 all the way to $130. So, I don't know what that is. 60% return, 60% rally, $90 to $120, 40% rally. So, this is what I'm saying. These rallies can seem very real, but they're in a bear market. This is what I think's been going on in the last few weeks in the NASDAQ and in the Dow. You've had these significant rallies, and bear market rallies can be hellacious. They can curl your teeth. We've seen them 50, 60% off the bottom, but their distribution, they're just selling opportunities. So once you understand what the pattern is, then when it does rally, you can sell into it while it's rallying, because you can understand that this is just a sucker play, because this pattern was telling you what the real deal was. It was over right here. And like Beyond Meat, it just had one more shot before it gave up the ghost. So markets can stay irrational a lot longer than you can stay solvent. So you can, say, hey, Peloton was a short here, and then goes, right up your, what. So, it's a tough game, this. But if you understand what you're looking at, there's a lot of money. So Gary says, how did you do on the other trade? So I dumped everything. I dumped Zoom right on the opening. I made like a dollar, thank God, because it went down $4. I dumped, Facebook. I got out of coin. Something does not working for me. And then I just stayed with Moderna. And then I started, shorting these, buying these Dow puts a little bit before it crashed. So I made a little bit of profits, and we'll see how it opens tomorrow. So sometimes, what is this thing doing? It's right on the lows. So the Dow closed. So sometimes what I'll do is I started buying Dow puts about 45 minutes before it crashed, and it actually crashed even more. But what I was doing was setting it up for tomorrow, where, something looks like it's pretty heavy, like we have this huge key reversal. Now, two things are possible. Either it's going to open lower and I'll just make some nice money right on the opening if it just opens 200 lower. Or, if it opens higher, I'll actually buy more puts, because this thing can't sustain. So this is the Dow Jones. And again, I think this is a distribution. It's very subtle. How do we know? This just looks like a squiggly line. It looks like it could go up, it could go down. But, I think very subtly buried within all of this is this guy right here, where you had a double top. And then you had kind of these shoulders. So it's kind of like a head and shoulders. And, you did rally all the way up to here. But I think you're, starting to crap out here, and you're going to start heading downward again. So, I kind of always look for, what do I think is the governing pattern? What is the pattern that's going to govern the direction? And, it can get confusing, obviously, when the markets just go up and down and whatever. So what I do, just like Peloton, is that I don't get sucked into this rally. I'm looking at this rally as an opportunity to get in sync with what this is telling me. And so I just wait for a certain day. And today was the day where all of a sudden the market told me where the risk is, made a new high, and by the end of the day, the sellers were in control. So now you have this reversal right at this area where there's this, pattern. Now, it's got a lot of crap in here that it's got to get through, and I could, very much see that maybe it needs to kind of build sideways before it goes down again. So that's kind of the risk, is that it does nothing. And I've got these puts that expire on Friday. So I need some kind of follow through quickly. And so what I'll do is, any kind of follow through into tomorrow, I'll just take this thing, look to double my money, get out and reload. But, when something starts closing on the low, I kind of take the bet that maybe this thing will just open lower. If it opened lower, it'd probably rally back, but, because it always needs to kind of come back and play around with us. So there is a certain relationship with the bars, but, or it, could open slightly higher, and in which case I'd probably start buying more puts. I just add to it, because at some point we got to go through these lows. When you have a reversal like this, it kind of points in the direction it wants to go. So I just started buying puts on the close. Typically, I say wait. You should look to confirm it, put a sell stop underneath there, let the market kind of put you in. And that is the better way to do it. But with options, you kind of need to kind of get in ahead of the game. So, and it can be dangerous too. So I don't want to get too dug in the weeds, but I will take certain bets based on the way I'll start looking at a market, 15 minutes before it's closing. So I think the best times to trade the market are 15 minutes before and 15 minutes after the opening, and then 15 minutes before the close, because anything in between is just really random. And then you become day trader, and you're in and out, and you're over trading, and all these bad habits start happening, and you can't really see. So to me, how something closes relative to the high and low, tells me a story, right? So, we have a pattern here. We have, this reversal, and very unlikely tomorrow we're going to go and take that out. So, if I get short here, this is a place where I can just camp out. I feel like, okay, maybe I can just hang out here and see if this is what I'm looking at without getting, killed. I don't think I'm looking at that tomorrow. So I think, it'll mess around, and either I'll be right or wrong, but, I don't think I'll get killed. And at some point, I think the market is going to let me out, and, I'll double my money on those puts that I paid about $1 for. So we'll see. May says, any Forex charts? So, I've been looking a lot at the yen pairs. So, to me, FX has been very locked up, very range bound. I don't like trading ranges. I like things that are going to break from one level to the other. So you can see the dollar has been pretty much in a, sideways thing. If I was going to trade the dollar, I would just be short the euro. So the euro is kind of, to me, a no-brainer. There's, very, very long-term patterns suggest that we're going to probably go and make an all-time new low on the euro. Let me try and just. All right, that's, I guess, good enough. So this is a, more than a decade. This goes back to 2008. So very different than looking at a 15-minute chart that gives you 4 days of history. I'm looking at this trade, and I have 12 years of history to kind of put this in perspective. And what I see with this thing is a very long-term descending triangle, where it's kind of been, it's a path of lower highs. So we saw dollar yen, in this triangle where at dollar highs, and then all of a sudden it broke cadence and made a higher high. Well, this hasn't. This has been a series of, lower highs. So this is a descending triangle price pattern, which is, inherently bearish. I mean, it can be neutral. So some of these patterns can be neutral, where they can get, certain places in the pattern and go the other way. But this actually came from 80 or 75, wherever the euro started back in the 90s. So this actually came from a lot lower, and then started to descend in this sawtooth pattern for, the last 12 years. And now, we're testing these lows again. And so we're at pretty much 2020 lows almost at 105 will be 2020 lows. And then below that is, 104. And so this thing looks like it's going to make new lows. So the dollar looks like it's, going to get stronger, which makes sense because we got to raise interest rates a ton. So, money goes to where the highest return is. So you can see within this long-term pattern on the monthly and the weekly is this double top right at this resistance line and this head and shoulders. So you had this very profound bear pattern right at the business end. When I call a business end, this is like Etsy. When you get, closer and closer to the end of, something, it starts de-risking itself. The more it kind of shows you a certain behavior, it becomes a no-brainer to get on board some of these trades. So once it broke this neckline here at 116, all you had to do was stay short, be short, and continue to stay short. And so, yes, you can get a little turbulence in here, a little chuck and jive, but this is something where I would look to short the rallies on a long-term basis. So hopefully this, gives you an insight and the value of looking at things from a big perspective where you can understand the cards you're holding. If you're looking at a 15-minute chart, something can go anywhere in the next 15 minutes. So when I look at the weekly, and this is enough history, on the euro, you have this very profound double top. It is exactly what it looks like. When you see this on Roku and, and all of these things that, began long-term descents, they all started with a look like this. Home Depot looks like this. And then you throw in a head and shoulders. And then when it, cuts through this neckline, which is simply a line drawn through the pattern, that tells you that's the firing gun. When it starts breaking that, that's when this whole thing is confirmed. That's when you're on the right track. But, it always gives you a look, goes down, gives you another retest of the breakout area. And those are always the fertile, where you get a retest and then a break. That means, it's real. So I just look at these patterns on any instrument. It doesn't matter what it is. So Ben says, how do you know where to draw the support? I just basically look to connect lows and highs. And that monthly one was a little bit of a reach. I was looking at that. So I was basically just looking at these lows right here. I was just connecting these lows right here, those lows, that low, and then just running it across. And then it, just turns out that this triangle basically hits it right there. So, Surzak says the pound New Zealand. So again, really, I apply this to any trading instrument. It's just the first thing I ask when I open up something. So this is a monthly chart of the pound versus New Zealand dollar. The more exotic the trading pairs are, the more likely you've got these massive trading ranges. There's a massive reversion to the mean. But there are times where these things just break out and you can make all kinds of money. So, what I try and do when, things are very nebulous is, when things really, you can make heads or tails, is I try and go to the highest time frame I can, try and find the most history. Because really, I want to just take a bird's eye view, a global view, see what's going on. Now, obviously, from a monthly, there's things that are going up, they're going down. And then if I see a certain area on the monthly where it's a buy or a sell, then I'll start whittling backwards and go to the weekly and the daily and try and reduce it to a certain thing. And so I have actually, for the last 4 or 5 years, been trading pound New Zealand, buying the dips, because I saw this kind of double bottom on the daily and the weekly, the daily, the monthlies, and said on balance, this thing was going to go higher. And in the heart of the pandemic, it was it was on a Sunday night. I had a take profit at around 211.87. I just threw something in there arbitrarily. And on a Sunday night, this thing went up like 1,000 pips, went to 218, took out my take profit. I mean, I started getting long in here. I made just, about 7 figures on that trade. And so it was all based on, observing this pattern back here that I thought, okay, that was a bottom. And over time, this thing was going to get a lift. But you can see now things have kind of kicked back in the direction of the major trend. So again, the value of these, big. So now where this goes, who the hell knows? I think you're in a downtrend. You've kind of got this cadence of lower highs, but you've got all of this area where, there is support. So, it's trading at 188, you could probably have another thrust back to 180. And so the preponderance of history suggests that this thing is going to go lower. But you're at a very tricky area here where, you've got a bit of support. You've come down quite a bit already. So, what I try and do is I look at markets like energy. So what, energy, has been distributed. What I look to do is like a rubber band, like pulling back, what I want the market to do is build energy again so that it stores that energy and then, get short. I don't want to, once this thing's come down from 2005, this thing's come down 1,700 pips in a straight shot. So yes, it looks like it could go lower historically, whatever, but do I want to take a shot? Sorry, I don't know. So I don't want to be a hero and buy it right there. What I want to do is wait for a pullback if I think it's still going to go down, and and look for an area where it builds energy again. So it dissipates energy. I want to look to it accumulate energy and then go again. And so I look at these markets as, energy. And so, this is kind of the subtle part where, on my email, I'll say, okay, we had a key reversal and, it's a static thing. And I'll say, put your sell stop there. But in reality, if this thing kind of just opens lower, I don't want you really just to go right into the market. Just because I say send an email and say, put a sell stop there. What I'm hoping this will do into the next day is kind of, open or go higher or open higher and then go that way. So I want it to build energy and then release in the direction I'm looking at. What I don't want to do is sell something that, started up here, close on the low, open down here. And so, it's just kind of hasn't built any energy. So, what happens is sometimes these things open lower, they, you see it's close on the low, it opens lower, goes a little lower. You think, wow, I'm getting really excited. And then to my mind, if we start turning through unchanged, meaning that it goes through that previous day's unchanged, then you've got trouble in your hands. That typically when, market opens lower and then starts going through unchanged, now you typically are fighting that the most of the day. So, it's very subtle on how you execute these orders and what have you. And I always think about markets in terms of energy, where if I'm looking to sell something, I actually hope that it opens higher, that I can either sell into that or see if that energy is going to release in the direction that I'm looking at. So I know it's, can be confusing and what have you. Johannes says, how do you know the right time to short the rallies? Well, the market tells you. The market tells you that the rally's over. The market gives you a heads up. Like I showed you in the Dow Jones, it gives you a bar where it says, okay, this rally looks like it could be over. And this bar tells you that. Made a new high today, and by the end of the day, the sellers were firmly in control. So what I look at is an overall trend or pattern. And in this case, it's not so easy to see because on balance, it looks like a sideways market. But to me, it feels like a distribution. And this one's much harder than most. I mean, this is very sideways. So you can say, well, this is a pick'em. This thing looks like it could go up or it could go down. How do you know? Well, to me, buried within this sideways cadence, is very subtle kind of, patterns. We have the double top there. We have a double top here. We have kind of a head and shoulders here. And now we have another double top here. And you say, well, couldn't this be a double bottom? Yes, but, we have lower highs here. A bottom should be confirmed by higher highs and higher lows. So if we were, to start getting above here, then this, might look like a bottom. But to me, this still feels like a distribution. And so the market tells you. And so you just wait for certain areas now where even if I'm wrong, I feel like I can take a poke here. I mean, I actually started selling it up there. So now, I think tomorrow, I don't think I'm going to get hurt. I think I'll be able to hang around and see what this thing does. And I don't think it's going to go, straight up on me. And if it does, I'll get out and what have you. I bought these put options. I can only lose as much as I put up, which is a lot. I don't feel like losing it, but so, just wait for certain areas where the market tells you when the rally is over. So you've had this rally, and now you have a combination where there's an area where there's a pattern, a potential pattern, let's say, where there's this M top or distribution top or whatever you want to call it. And then, what I call this insurance day bar, where you have this rejection. So the market went to this thing and got rejected because it closed right on the low of the day. The sellers were in control. So now I have the pattern, kind of a subtle, somewhat of a downtrend. It is sideways, but, I'm betting that the next direction is, is lower based on the combination of all of this. Now, this one's not so clear, but for me, like Moderna is clearer, where you have a downtrend. You had, this uptrend here. Let me just make this bigger. So, I do a morning session where, I'm always asked, should we short Tesla or should we short Moderna, at certain points? And, the thing is, you don't have to be a hero. So there was a certain point where Moderna, was going down and it had gone down substantially. And then it started hitting, a pocket of support. And, every day, my moderator, Jonathan, would say, well, should we short it here? Should we short it here? Should we short it here? And I go, you don't have to be a hero. You don't have to get in front. The market will tell you when it's ready to go. So you can see this thing rallied from 120 to almost 200 bucks, 40% or whatever that represents, huge rally. And to me, this was a bear market rally. And so the question is, how do you know where to short it? And the answer is the market will tell you. The market will give you a pattern and a price action where it now tells you, okay, it's going to go back in the direction. So John says, good, loud and clear, let the market tell you. And that's it. The market is always right, right? So, all through this thing, you can second guess it and, listen to the news and what have you. But the market will ultimately tell you. This is in a downtrend. So, very tricky. And this has been the conundrum for me in the last couple of weeks. This is what I've had a lot of difficulty in my writings and explaining to people is that, yes, I saw a huge rally, but, I always had the feeling that if I didn't get out quick enough, this could be very quickly back in my face. And so this is starting to confirm what I've been feeling. where, you get long some of these things. And I was long PayPal at 100. I took it on a nice ride to 115. And now I've left it alone because I just feel like, I could have this thing, the wind come back in my face. So, this is what all of these stocks look like, where they had, this rally from 90 to, 125 is pretty significant. But if you don't get out quick enough, this thing's going to be back at 100 again pretty soon. So market is dynamic. So Julia says, everything is in the market. You don't need to be a hero. And that's basically, Diego says, do you trade silver? I trade anything that has price history. So I'm just looking at some of your comments or questions. I'm pretty much going to end it there. You mentioned that gold is in range bound at some point. So I'll look at gold and then I'll end it here because, we can talk about endless charts. And really what I'm trying to get across is a way of looking at any instrument. I could look at 30,000 instruments here, but what I'm trying to do is, try and give you a way that, what I try and do is I put a boundary or structure around prices. And, I've been doing this a long time, so I can see these patterns kind of in my sleep. So when the market kind of gets in something like this, we don't know, where's this going, and what have you. And so what I, have been looking at in gold is I've been looking at gold through the prism of this ascending, broadening price pattern for about a year. And just trying to, so I can always say, but I called this a long time ago. I'm just trying to look for, and I can't find it. So this was where gold was about a year ago, and it was in the middle of this. So, I started setting up this pattern a long time ago when gold was just in the middle of it. And by able to, putting this within a structure, putting this noise within some kind of boundaries, I was able to make sense of it. And, I informed our member, this was back in January 2020, about a year ago, to sell gold at 1867, based on this ascending, broadening triangle that I'm showing you right now. And I said my target objective was the lower end of this thing. So by putting boundaries, this is how I can see where a potential take profit is. Somebody asked me about a take profit earlier. It depends on each trade. It depends on the cadence, the pattern. And so I could very clearly see the support and the resistance. And I said in this email, my target objective was 1700 when the market was trading at 1867. And then in a follow-up email, I said, get short again, add to your trade. This is still coming down. And my target objective was still 1700. And so I put on those two trades and it went to 1687. I put my take profit a hair under 1700 and bagged, a pretty decent amount of money. And it was simply based on the pattern that I'm showing you right now. So when I saw this pattern, this is when I started shorting it right here. So there was a key reversal in the midst of this pattern. And so I look at a combination of patterns and price action, and I got short here and I got short there, and I rode it all the way to this price level. Somewhere in there. So this is an ascending, broadening price pattern where prices go higher through the pattern. It starts out life in the pattern narrow and then widens or broadens out at the top. Now, these patterns can be neutral patterns. This is typically a reversal pattern where, if it comes through here, it actually would go all the way to the beginning of the pattern. So if this starts breaking 1800, I know where this is going. It's going to go back to 1200 bucks, as insane as that sounds right now. And so I'm looking at this where I see a potential double top, but we're kind of stuck between, the top end and the low end, and we're right in the middle. So, this could still go higher, it could still go lower. I have a feeling this thing's going to, start hitting its descent. Higher interest rates are kryptonite to gold. And so I would simply start sneaking in, sell stops right under these lows, right under like whatever, 1875. And you could leave it in there. I mean, if it just goes up and down, it goes up. If it goes up, you're never hit. It's no big deal. But, if one day, this thing starts popping, you could find yourself into a good trade. So to me, that's the beauty of a resting order. You don't have to look at 5-minute charts till your eyes bleed. You just put your pending or resting order, just leave it there and let the market put you in at the time and price that it's ready to go. And usually when it does, you get a nice little throughput. So I'm looking at this area, this 1800. If we go back there, we could have a sizable ride lower. So right now it's kind of in the middle. It's just backing and filling. But, you've got the series of lower highs and lower lows. And I don't know, if you put a gun to my head, I would say this is going to go lower. All right, I think I'm going to end it there. And I'll be back tomorrow at 4:30. Does this make sense to you guys? Do you guys think that this could add value to your trading, or does it seem like it's complete Chinese and has no, no bearing? So Ben says, fantastic. Shaw says, very impressive, very helpful. Simon says, thanks. This is totally good. Poria says, thanks. Tony says, yes. Julie says, great work. Antonio, yes. Natalia, all the best. Thank you, Natalia. Natalia is one of our members and very loyal. And I don't know why you're not sick of hearing me anymore, Natalia, but thank you for always being on. Arthur says, clearly there's a lot of judgment call, but it's coherent. Well, I know it may seem that way, but there is a method to the madness. So, I kind of see these structures. Sometimes there's nuance that I don't really know how to adequately explain, but really it comes down to first a picture and then a risk reward. And ultimately it doesn't really matter what you do, right? So if you say, I want to short it here and put my risk at the top of the weekly thing, and take that amount of risk, you might have that kind of reward. So it all comes down to kind of waiting for certain areas where you can make risk reward calculations. And that's why I've been kind of hesitant to make a call on gold, because it's just been fluctuating in a certain zone. But the more it kind of fluctuates and shows me its hand, then increasingly I'm able to make a risk reward calculation. And as I said, you don't have to be perfect on every trade. 2 trades can make my entire year. So Min, you're welcome. So Hugo says, makes no sense at all. I don't know if that's what you meant to say, but that's fair. Thanks, Mark. Learning something new daily. Greg says, very much, you remind me of Jesse Livermore. Well, that's some heady company. He was one of the greater traders of the turn of the century, last century. Arthur says, very much appreciate you spelling out how you see it and sharing your principles. So yeah, it all starts with it's a 4-step thing. What is this thing doing? So on balance, this really looks like it's in an uptrend. So this is in an uptrend. But trends end when there is a pattern that is a kind of a bear pattern. Now, this hasn't completed that bear pattern, and I will sometimes see these things a little early and, and get in before the, the horse leaves the barn. I won't wait until it's down here. But so this one's a little bit, nebulous because this is still in a defined uptrend. But, trends end or they put on certain resistance levels. And so I don't really have a trade in this. So, and then once I see a trend or a trend ending, then there's a chart pattern. And then if there's a chart pattern that tells me that this is a buy or a sell, then I wait for what I call my insurance day bars. And I define that as a key reversal. So right here is a key reversal. You made a new high, close on the low. You made a new high, you close on the low. So this bear pattern, this double top combined with these key reversals within this ascending wedge structure told me to short gold right here, and I got out right there. I said the target objective was there. Why did I choose there? Because this was where the line came in. And so in my email back here, I said I'm looking for this thing to come back down to 1700 when it was trading at 1900. So you can say, well, lucky guess, what have you. But so there is a method to the madness. To me, these patterns and price action, these guys, this double top and these reversals pointed in the direction it was going to go. And so once I see my key reversal or my inside day bar, or in this case, it's a weekly chart. So it's an inside, an inside bar in the weekly, monthly, daily. So these are all kind of like inside bars. To me, that's like a coil. And to me, it's likely to uncoil in direction of, this resistance pattern. So once I see, the chart, then I look for my key reversal, then I look for the inside day bar, and then I layer it with an execution plan that requires me to confirm this. So this is my subjective analysis. I could have early stage dementia, probably do. And so this is all inherently my observations. But what I try and do is layer it with a confirmation that says, okay, if I see I want to sell this, I need to put a sell stop pending order, or if I want to buy it, I put a buy stop. So let's say I think this is a resistance, a double top, and I'm seeing this early. Like I said, I would just throw a sell stop under these weekly lows. So this would be under all of these weeks. So my thinking is if it starts taking out the last 6 weeks lows, with this big double top here, there's a good chance that the market could put me in the right direction. And guess what? If I'm wrong, I'll put a stop loss behind it and, no harm, no foul. So what I'll do is I'll just put my pending order underneath this weekly low, call it whatever, 1880. And, if the market doesn't go there, no harm, no foul. I'm not triggered. But, a week from now, 2 weeks from now, the middle of the night when I'm sleeping, this thing puts me in, I could wake up and find myself in a good trade. So it's kind of a 4-step layered thing that puts you closer and closer to the bullseye of, a high value trade. And, some work, some don't, and some really work where, I make, 6 figures, in a move like that. And that's really what I'm looking for. A lot of the times the market's just doing this and then I'm not trading. I didn't trade gold all during this. So, I'm looking for moves where it moves from one level to the other or one level to the other. And I'm just looking to take a piece of the middle out of big moves. And that's really what I'm trying to do. Thomas says, my first day. Thank you for your sincere analysis. You're welcome, Thomas. Orlando says, pure price action. Yes, that's all I need. Dwight, Thomas was saying that this guy Hugo is spamming us and trying to sell something to our viewers. So if you could block him.
Okay, sure thing.
Thanks. And, on Thursday, I will ask you for a review, because this is what happens. We get people who try and slam me and call me a scammer and whatever. And all they're trying to do is draft on you guys, draft on my traffic, steal you away to something they're selling. So if you'd be good enough to leave me a review, and I'll give you the link to that on Thursday. John, thanks for that. John's a long-term member, John Weaver, so thanks for that. So Shao says, very clear and precise. Thank you. It's sometimes very hard for me to explain, just years of experience. I can just intuitively look at something and get a visceral feel. And I know I don't always do a good job of explaining that. All right, I think I'm going to leave it there. Thank you. I can see when you pointed out, not sure I can do on my own. So Jerome, that's, what the pattern trader is about. We try and give you, so if you start seeing this enough, that's what the idea is. So every day I try and, show you what I'm looking at on the chart. I don't just pick it out of clean blue air. I show you what I'm looking at. And then most people will focus on the trade. Did this work? Did it make money? Did it? And actually that's the least of what I'm trying to do. I'm trying to point out what I'm looking at, try and give you an explanation of what I'm looking at. And so over time, this is the value is supposed to be informational and educational. Whether these things work or don't work, and my track record is pretty extraordinary. But the idea of the pattern trader is to impart information so that you don't need me. You don't need to rely on TV or commentators or analysts or what have you. They've just got something to sell, right? So you need, in this world, especially in this world, there's so much information and disinformation. You need to be able to think critically. And I think that goes for everything else, socially, and otherwise. And I think it's, especially important in this world where everybody looks at 147 characters on a Twitter feed and nobody can think anymore. So what I try and do is give you a way of thinking, hopefully. And if you like it, that's cool. If not, that's cool too. All right, so thanks for all those compliments. A lot of you left me some very nice messages. So I will see you back tomorrow, 4:30 Eastern Standard Time. I hope you have a healthy and prosperous trading day. Stay safe and keep your risk low. I'll talk a little bit about risk. I know I was going to do that today. I kind of skipped it, but I'll talk a little bit about risk tomorrow. And maybe you can remind me. All right, Dwight, thank you very much.
All right, Mark, no problem.
Thank you.